Hello there, everyone. All right, now, so welcome back to the markets. All right, and I just want to share with you, all right, all throughout this week as I was trading together with my students, okay, what have we observed and what have we noticed about the market's behavior. All right, now, so hopefully these kind of informations will help make you make better investment decisions, right, and also make you a better investor and a better trader in this market. All right, so just knowing what the market is doing, right, can ultimately, right, increase the probability of your success in the next few trades that you actually plan to take or actually plan to do in this market. All right, now, so hopefully in this video, I'll be able to bring some pointers, right, to helping you making better timing decisions about when you want to get in on certain trades that you have in your mind right now. Right now, so what I'm going to do is I'm going to take reference to the SPY, right, which is actually the ETF version or the stock version of the S&P 500 index. Right now, so just for starters, right, you might want to know that for every SPY over here, right, it is basically 1/10. Okay, let me just bring out the drawing tools over here. All right, so the SPY, right, is basically 1/10, right, of the SPX, right, which represents the S&P 500 index. Right now, so while you're looking at the prices over here, which is 564, right, let's round it up, right, it will be equivalent to the S&P 500 trading at 5640. All right, now, so that's what it means. All right, now, so let me just show you the reference over here. All right, and you can see that the SPX is actually currently trading at about 5667. All right, now, so some of you will then be asking, Terence, all right, you said that it's 5,640. All right, so why is this number different? Right now, so this is where, right, the supply and demand of certain products actually come in. Right now, I say this because the S&P 500 index is basically made up, right, of the closing prices, because now markets are closed, is made up of the closing prices of the 500 index component stocks. Right now, so for the index itself, you basically can't trade it. Right, so there's no buying and selling pressure. There's no demand and supply kind of issues involved. Right, but when we go to the SPY, right, which I explained to you earlier on, right, this becomes an actual share, right? This becomes a product that people can buy and invest in. All right, now, so now it becomes subjected, right, to supply and demand issues. All right, now, so now that you see the SPY prices are actually lower, right, than the index itself, because we saw earlier that the index shows us at about 5,670. I think that was it. Yeah, okay, now, so what it basically means, okay, 5667. All right, now, what it means is that the people are expecting, all right, the people are basically expecting, all right, that come Monday, all right, or going forward, all right, the SPX, all right, have a higher probability, all right, of coming off. You see where I'm going? All right, okay, because people cannot put their thoughts, okay, into the index itself because it's just a marking point, right? But people can put their actions and their thoughts, right, into the share version of it by buying or selling more of it. Okay, you see where I'm going? All right, so now that you see the comparison, right, and the SPY, right, is basically lower than the SPX. So you can actually draw reference, right, that people have a slightly, all right, bearish view, right now. Okay, now, so this helps you put things into perspective, right? And what I really want to bring to your attention right now, okay, is basically what the market has done. Right now, so effectively, many of you would see, oh, Terence, this is an absolutely positive week. All right, we're going to stabilize, right, and the market may actually start going up. Right now, I want to give you a different perspective, okay, because if you notice what the market did the entire week, right, you may actually look at it very differently. Right, so it was a 4-day trading week over here, right, or was it a 4-day trading week? I'm not sure. Right, let me just double check. Yep, this is Friday, right, and then we have Monday, Tuesday, Wednesday, Thursday, Friday. Sorry, it's 5-day trading week. All right, now, so what we have over here is basically a market, right? If you look at it, they did absolutely nothing. Now, what do you mean, Terence? Right? I had so many green candles over here, right? But if I drew it out for you to see, right, you would see that the bottom of this first candle here, which is the Monday's opening price. Do you notice something? Right, the Monday's opening price, right, it's very close to the Friday's closing price because it's a green candles, which means that the top, right, of this candle body would represent Friday's closing, right, which we see over here, right, it's closing after 564, right? Now, so what did the market open on Monday? Okay, now, I just want you to look at the notice of the opening price over here, right? As I put my mouse on Monday's candle, you can see that the SPY opened at 562.80. All right, so effectively, the SPY literally went up by only $1. Right now, so based on what I taught you earlier, what is a dollar? A dollar is basically 10 points, right, on the S&P 500. So would you really say this is a bullish week? No, right? The market just did nothing, right? But what we say in the professional world, right, is that the market did what we call a volatility compression, right? Now, so when the market started its fall, right, in the mid of Feb, right, all the way until last week, right, what it did was in a volatility expansion phase, right? Because as you notice from the chart, it was dropping fast and furious. So as it was dropping fast and furious, right, it makes people scared. It makes people afraid, right? So people start buying a lot of put options, right, during this process, right, to try to hedge themselves or to try to protect themselves, right? So while they take on these buying put option actions, right, what they're doing to the volatility index is they're expanding it. They're bringing the VIX prices much higher, as some of you will have noticed, right? So what we have last week over here, right, was a non-action. Right, so when you have these kind of non-action week, right, it calms people's fear, right, and it makes people think, right, that the worst is over, right? So when people think that the worst is over, right, they're gonna start taking off some of the hedges that they actually bought earlier, right? So as they take off some of the hedges, right, the number of put options that are being opened is no longer as much, right? But is the market really signaling that to us, right? And I will tell you honestly, is no. Right? Okay, because as the market falls, it doesn't fall continuously in one straight line, right? It's got to ebb and flow, right? Just like the way it goes up, right? So what we have over here, right, is the first ebb, all right? And what we can say over here right now is probably the first flow, all right? Now, so this flow, is it gonna end over here? I don't know, right? Because if you look at the, the kind of box that I just drew earlier, right, we could literally say, right, that the market, right, can be trading, right, inside this range right now. Okay, so I just want to draw this box here. All right, the market can literally be trading inside this zone right now, right, which brings us at about 5,710, right? 5,700, let's round it off, right, to 5,500. Yes, 5,700 to 5,500. That's basically a 200-point range on the S&P 500 index, right? And where are we right now? Do you notice something? We're right smack in the middle. All right, now, so this literally means, right, we can potentially see that the market bounce another 100 points next week, and it still doesn't mean anything, right? Or the market can fall by 100 points at the beginning of next week, and it also still doesn't mean anything. All right, now, so this is pretty ridiculous. Why? Because nothing is really going to be significant in this market unless we get a break up from here. Right? Or we resume the selling, right? And we break down from here. All right. Now, so, many of you may have heard of this term called the dead cat bounce, right? Now, what we have over here is definitely a bounce of some kind, right? But is it considered the dead cat bounce yet? Right? It may not be the case, right? Now, I say it may not be the case because if you look at this blue line that I've drawn over here, right? This is basically the previous low, right, that the S&P has done, right, sometime at the beginning of January. All right, now, so it hit this low, which is about 5,750. All right, so we can literally still break this range, get to this next point, right, and then after that, fall from there. Yeah, all right, it may happen, right, or they may be able to stretch it a little bit more back to 5,900, right, and then slam the market from there. All right, now, so all these surge up, right, doesn't really mean anything at this point right now. All right, now, so if you need more evidence behind this, right, I can quickly show you some things, right, before, all right, we end this video. All right, and what I can bring your attention to, right, is to enhance your knowledge, right, what you might want to have in your trading tool, right, is really a watch list of 10 of the biggest ETF stocks. Right now, when I say this, it's because these 10 ETF stocks basically represents the different business industries, right, that are trading in the US market. Now, of course, the biggest ones that we see right now is definitely the technology index. Right now, so the technology index, apart from QQQ, right, it's also having its own ETF stock, right, which is the XLK. Right, so this is called the technology sector ETF. Right now, so if you notice something, all right, if you look at the chart right now, do you notice something really weird, right, or kind of out of perspective? Right now, we had the market did somewhat kind of a bounce, right? But do you see any major movements in the XLK? No. So whatever that we had the entire week, right, happening in the market wasn't driven by tech. And that's a significant change. Why? Because technology stocks, or we say the big 7 tech stocks, were the ones that single, or I would say seven-handedly, pull the market up to big new highs. But yet, now when we get that bounce in the market, it is not these 7 stocks that are moving it. So you might be asking, Terence, then what is moving the market? All right, what is moving the market right now? All right, now you may be surprised, but you shouldn't be. It was the financials that was absolutely strong last week. Do they have a reason for that? Actually, no. There's no reason for financials to be bouncing right now because, right, financials have been undervalued for a very long time. But with this rally up over here, right, they are no longer undervalued. They're very expensive. So these financial stocks literally collapse together in the markets, right? And now they are the sector that's pulling this market up. Now, so can you imagine this? If we are going to get some kind of a reversion again, right? Or some kind of a volatility expansion, right? So that would mean that market is going to come down. Yeah, okay. If it's going to come down, right? Don't you think that this sector, right, will be the one that's going to suffer the most as well? Yeah. All right. Okay. Now, so if you're thinking about shorting technology stocks for the next sell-off, you shouldn't be, right? Because they haven't bounced much. All right. Of course, true. They may fall when the market falls as well. Yeah, that's true. But right, if you want a biggest impact for a downside trade, right, you should be looking at this sector. Yeah. Okay. Now, so that's a valuable tip. All right. Okay. Now, so apart from that, right, the next sector that did absolutely crazy stuff is the energy stocks. Right? Yeah, we have heard about the oil stocks because of all the tensions coming in, right? And can you see that oil stocks are kind of like, right, at a zone right now where it could be, right? I'm saying it could be, right, a double or maybe even a triple top. Yeah. Okay. So we could be at a double or even a triple top, right, when it comes to the right oil sector as well. Yeah. Okay. And over here, we actually had a lower low. All right. So a lower low presence, right, would actually enhance the significance of a potential formation of a double top as well. All right. Now, so another potential bearish look, a bearish trade for any of you who are looking to be bearish. Yeah. Okay. Now, and you might notice for the rest of the other sectors, they haven't done much as well. Utilities have benefited. Yeah. Okay. A little bit, but in the last 5 days, they haven't done much. Right. Their rally was really about the 2 weeks prior to that as the market was falling. All right. So they just held their ground the entire week. All right. Now, the industrials got a little bit of the bounce as well. Yeah. Okay. The healthcare didn't do much, right? The consumer staples didn't do much to help the market, right? The retail sector obviously didn't do much, right? And the consumer discretionary, yeah, okay, didn't do much as well, right? So, looking at the 10 major sectors, right, that will move the market. Sorry, I've forgotten one, right? It's the builders. The builders didn't do well, right? So it was really the standout, right, in financial stocks and in the energy sector. Right, so for anyone who's looking for the short side, right, or a reversion back towards the downside trade, right, then these will probably be the 2 sectors that you want to look at, right? And of that, right, you might also not be surprised that some of the biggest bank stocks, right, like Wells Fargo over here, right, becomes great candidates, right? Okay, why? Because if you look at what is done in the last 5 days, right, it went from $70 all the way up to $72.50. Right. Okay. Now, so the next one over here will probably be BAC, right, which did almost the same thing as well. Right. It went from $40 all the way to $42.50. right, which is almost a 5% move, right, for the week itself, right? Now, you can also take the gem of all financial stocks, which is Goldman Sachs, right, which did, right, a substantial move as well. It went from 540, right, all the way to 560. All right, now, so these are probably three of the financial stocks, right, you want to take a downside bet on, right, if you're bearish on the market. Yeah, okay, now, so if you look at the big seven, right, now, this is something I want to show you, right? Now, the last 5 days, what did NVIDIA did? Did you notice something? NVIDIA was actually lower for this week. It didn't even close the week positive. It was negative for the week, right? And the market went up, right? Now, so Amazon did literally the same thing, right? These stocks, right, all open on Monday much higher than where it closed on Friday. Yeah, okay, now so let's look at Google, right? Google was the same thing. All right, now Microsoft, right? Microsoft was probably one of the only positive stock for the week. Yeah, okay, but you can see Microsoft looks like it's breaking this downtrend as well. All right, okay, and that's why we might have this big strong move on Friday. Yeah, okay, Meta didn't do well. All right, it was lower for the week. Apple, right, followed the path of Microsoft, right, and Tesla. Right, Tesla has been absolutely smashed. So it's just normal to see some kind of a significant bounce coming into Tesla, right, before, we have anything else. Right now, so, this is really what I want to say, right? A lot of my students know that I don't really enjoy or I don't really want or like to trade Tesla stocks, right? But, okay, it is still a viable company. It is still a profitable company, right? And having a stock that got smashed literally almost 40%, right, since the start of the year, right, is a little bit excessive, right? So for anyone who's looking for some kind of a bounce, yeah, okay, some kind of a positive trade, Tesla will probably be a good bet. Yeah. Okay. Now, so, my students will be shocked to hear me say this, but it is what it is, right? So as a trader, right, you never really try to fall in love with any kind of stock, or you never ever forms any kind of hatred for any kind of stocks, but you try to spot opportunities, right? And this is definitely one of them. Yeah. Okay. All right. Now, so I'm going to just wrap my video over here, and hopefully, whatever I shared, right, help you put into perspective, right, how your trading should be, right, going into the next week forward. Now, so if any of you would like to embark on a journey, right, of trading alongside with me on a weekly basis and getting all this information firsthand, yeah, okay, then, right, you might want to, you might want to be one of us, right? You might want to be one of us, right, and join our community, right, where I share this knowledge on a weekly basis as we trade live together with our students. Right now, so with that, all right, this is a wrap. This is I'm Possible Investor Terrence signing off in this video, and I'll see you in my next video update. All right, bye for now, everybody. See you soon.